To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. Bitcoin is currently 113,424. We've seen across the weekend that Bitcoin actually did really well, and it's broken through this very short-term resistance. Now, one thing to be aware of, as we see this, the retail crowd, and retail is unfortunately just another word for doesn't know how the markets work. They will be getting incredibly excited. So what I'm going to do is to go back to two instances where this happened recently, and I want to show you how that played out. When people first get into financial markets, they are told that they must get 100x. Whatever that is. They are also told to use leverage and only chase literally as many percent as they possibly can. 100, 200%, especially doing it in, say, under 2 minutes. This is absolutely insane, and it's not the way financial markets work. So I'll show you how financial markets actually work. As the top 1%, we are not interested in stories. We're not interested in hype, only reality. Why is that? Because the markets are where you make your money or lose it. And price is the ultimate reality. Okay, so let's go back a little bit in terms of history and look at this particular area right here. Okay, what are we seeing? What we can see here is that we had a breakout and it didn't go parabolic after that breakout. What did it actually do? It retraced. Now, a lot of people would have been caught off guard by this retracement, and then they'll get really bearish. And what happened next? All the shorts got absolutely smashed to the upside. So if we see something like this, we would anticipate a retracement back around that 111,400 area before taking off. Now, this is case one. Let's have a look at case two. What did happen in case two? So in case two, we saw a really substantial reduction in Bitcoin's value over an extended period of time. When we got the breakout, we were just here. Now, what happened next was a retracement back to that trend line, and you can see things got really, really choppy. Now, when we just consider that the global economy is just like a literal basket case at the moment, we have to always assume not only upside momentum, but downside momentum also. So when we got, just imagine you're just here or just here. You see the market go up, look at that. It did retrace back down. And then you would think, oh, it's a banana zone. Everything is going to go fantastic. It's going to go to the moon in one just huge God candle, and it's never going to come back. And this is what retail are told all the time. And often, what does that actually result in? People making huge losses. You do not want to be retail. Retail is a license to be destroyed. Instead, you want to focus on being the top 1%. As in every area, the top 1% think differently than the other 99. So that's what we need to do. Now, there's a thing that will change absolutely everything. I'll show you the rule. As a top 1%er, you have a lot of rules, and of course I've shared many of mine, but you always need to create your own as well. Rule 271 is a particularly good one. You don't have to make big percentages to make big percentages. Retail is taught that the only sign of success is some 100% gain, 200% gain, 300% gain, especially on leverage. If you do that, you're a success. If you don't, you are an absolute failure. I have to say, after literally 4 decades inside financial markets, never a greater lie was perpetrated en masse. The public thinks that big percentages are a rule. They are not. They're marketing hype. I'll show you what actually works institutionally. And when you understand Rule 271, it's an absolute game changer. It takes all the stress from your shoulders. You'll be able to sleep again at night. Chasing big percentages once off is the thing that most professionals would say that's a crazy thing to do. For example, just say that you wanted to make a 3.5% profit per week. Now we're taking a weekly basis here, not a monthly basis, not a daily basis, not an hourly basis, but a weekly basis. Inside the crypto market, 3.5% per week is absolutely doable. What happens in the first week? You make that 3.5%, but the second week you make 3.5% and a little bit extra. 3.5% times 2 is 7%. You can see that additional 0.12%. Over time, that capitalization is going to add up to huge things. So if you keep rolling over, just doing your 3.5% return on average per week, by the end of a year, by the end of 52 weeks, you're up nearly 500%. 500% profit, that is. You can see here that 498 right there plus 100 equals 598. This is a 500% pure profit. Now, one thing to understand, 3.5% is doable. If you wanted to go up higher, say 5%, that will change things quite substantially. So doing 5%, but you must do this consistently, and you don't want to give yourself a coronary while you're doing it. Yes, you get a greater percentage return, but the issue is it possible to do? And you want to do it fairly stresslessly. In other words, don't get stressed out of your brain trying to accomplish it. Now, hopefully, you can see if you can compound 5% just on a weekly basis, 5% or less, you can do exceedingly well over the period of a year. This is a literal game changer. It totally takes the stress out of the markets. Inside the Profiting Masterclass, I explain to students that when it comes to retail thinking, people are wildly manipulated inside financial markets. You need to become demanipulated. You can only do that by embracing reality and just getting rid of all of those ridiculous and stupid stories that you hear just all over the place. A lot of people just think that they can go into the markets and gamble. Of course you can go into the markets and gamble and the house will always win. Just like in real life. You must know what you're doing. For example, when we look at Bitcoin, how do we progress from retail into an institution of one? The first thing to do is to understand structure. When you understand structural levels in terms of structural support and structural resistance, it's an absolute game changer. And we saw across the weekend, Bitcoin finally got above the 111,300. We've been watching this for quite some time. It made its move, and boy oh boy did it make a move or what. And we've seen just recently that pullback to the 113,000 structural support level. Now, what typically happens is people say, I will put a resistance in here because price went down from there, and I'll put a support here because price went up from there. Both of those concepts are absolutely nuts. Now, why is that the case? Because you must look across all of price history, not just recent indicative price. And what you will find is that when you know the structure of the chart that you're looking at, it is an absolute game changer. To make that 3.5% per week, you must know structure. And not retail structure, actual structure. Now, what does it mean for Bitcoin at the current time? We came up from that 111,300 level, which was really strong structural support. We've come up through a variety of different structural levels, but we haven't managed to get above that 114 just yet. If we're not going above, we target the one immediately below. If we reject from that, if we bounce from that, we target the one immediately above. There's a lot more to it, in fact. In what we can see with Bitcoin at the current time, it is in a retracement wave. So the critical thing for you to keep your eye on, do we do structural passes on the 113 or does it fail? If it fails, there's a 112,600, and if that fails, that will immediately target the 111,600. You can do your targets internally. Now, don't forget, you don't have to do 3.5% per week. You could do something like 1% per day. Now, that's if the market allows it. I'll just quickly show you in terms of the calculations what 1% could look like. Now, just by way of comparison, if we were doing that 5% per week, you can see week 1, week 2, week 3, week 4. By the time we get up to week 4, which is approximately 30 days, by the time we get up to that, we've made 21.55% at 5% profit per week. Now, how does it work for 30 days at 1%? Just remember, literally 22%, 22. Okay, looking at 1% per day. We make 1% on the first day, 1% on the second day, and it just accumulates up. Okay, that looks pretty good. So by the 30th day, we've not made 30%, we've made 34.78%. Wow, that is substantially better. Now, what was that number that we were trying to compare that we'll just say 35% to? You got it. It was 22%, or 21.55% to be exact. So you can see doing 1% per day is way, way better than doing 5% per week. That is a mind-bending thing to the majority of people. Of course, there's something that you should keep in mind. If doing X%, whatever that is per day, per week, is stressful to you, please don't do it. Do something that works. After all, as a top 1%er, trading and investing is a lifelong profession. It's not something that we do with bull markets or bear markets. We're in eagle markets. We understand that even if price is in a bull trend, it's going to come down. It's going to come down quite substantially. And it's the same in a bear market. It's going to go up quite substantially as well. Therefore, if you do these small percentages, you can make money in any financial market. So when the tourists take off after they've got bled by buying the top, you can still be here just doing your thing, churning and burning funds. Whether it's up or down makes no difference to you. That's actually what makes a top 1%er a top 1%er. They don't bail. It's really important to know how markets work. So in the past 24 hours, we've seen the majority of liquidations inside the crypto market as short liquidations. When the shorts get liquidated, they become forced buyers. They basically borrow money, they sell first, and then they buy back later. Now, what happens if the longs come in and liquidate their positions? They become forced buyers, which causes spikes up like that. And in terms of the liquidation heat map, if it's red, all the shorts have been handed their lunch. If it's green, all the longs have been handed theirs. And you always find this. The longs and the shorts are always liquidating each other. Now, we've just seen a big liquidation come through, and a lot of people, a lot of shorts were absolutely taken out. They were wiped out of the markets. This happens all the time in the crypto market. When you have a concentration of shorts or a concentration of longs, they will get liquidated just eventually. Sometimes they could ride positions for a considerable amount of time, but it's something that you must be aware of. The longs and the shorts will whack each other around the head, but they always obey structure. And you can see that 114,700 was a big cause of a big headache for the market in terms of the shorts and also in terms of the longs. We can see that up around that 115,500 is another level of structure. So keep your eyes on the structure. One thing, also keep your eyes on the gaps. When you have a gap, it can move very, very quickly up. So just be aware that it can move quickly up, but also come back and retrace that entire move. This means that we can make those percentages if we're conservative. If you're hopping into the market and saying, I'm going to make my X percent per week or per month or per day or whatever it is, what period of time works for you, you want to actually think about how price moves. We always see this kind of triangle action back to the base. It is very, very normal. And when we've consolidated for a period of time, and this is not always the case because this is weekend price action, which can or may not be representative when the market's open. So a degree of caution is always required. Now, a lot of people will just YOLO into something. You only live once, so go big, go hard, and then go home. Your knowledge is at an elite level. You don't want to be YOLOing into anything, especially the green candles, because green candles, while they may look really good, they do tend to retrace. So if you make your small percentages between structural levels, you will find that you will do incredibly well, and you'll just create a strategy that works for you. One of the most important things, do not feel stressed on your journey. Trading and investing is a lifelong profession. You don't care about bull markets, you don't care about bear markets. They're things that retail is told. Retail are told all sorts of lies and deceptions, and people want to keep retail really dumb. We want to do the exact opposite. We want people to be really, really smart. Why? Because it's fair. Always remember, the markets are perpetually moving in a wave, longs and shorts getting liquidated basically, and the shorts must cover in a downtrend, and when they cover to take profit, they must buy. And you'll find that bear market rallies can be hundreds of percent. Only retail gets freaked out and says, I can only be in on a bull market. Who the heck told you that? And who said you have to get out in a bear market? Who said that? What we know is it's always an eagle market. It doesn't matter what price is doing. We can make our small percentages on whatever time frame feels good for us. And we can do very, very well. In future videos, we'll go through the structure that you can apply to extract these small percentages out of the markets. It starts with the cheat sheet and then daily structure, translating that into monthly and understanding how three-dimensional risk management is so vitally important, and then just comparing and contrasting to your long view model. But always understand, price is always just moving structurally between structural support and structural resistance, structural support, and up and down in a wave-based function. Price is always moving in a wave, and your best bargains are when price goes red, which makes bear market trading actually really, really straightforward. You don't have to be concerned whether a bull market or a bear market is unfurling itself on retail. We're high above in the eagle market. If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.